Welcome to FinStreet. Today we have with us Mr. Digant Arya, founder GreenEdge Wealth Services. Welcome to the show, Digant. Remember that in May we spoke about the pain that is coming in MFI sector, and Q1 all the numbers were pretty bad with respect to asset quality pain in this sector. Do you further foresee this pain to continue for MFI sector?
Morning, Abhishek. See, the thing is, we had a 2.5 year party in this sector, where the growth, the loan portfolio doubled from 2 lakh crores to 4.5 lakh crores. The customer incomes did not go up so much. They're really over leveraged. So, Abhishek, I would say that Q1 is just the start, and it's like picture abhi baki hai. If you party hard for one day, does the hangover get over in 1 hour? No, it takes one full day for the hangover to go. So I think Q1 is just the trailer, and we shall see that the numbers will get progressively worse over Q2 and Q3. And maybe from Q3, Q4 onwards, some good players may actually report bottom earnings, and then they can think of bouncing back. But otherwise, things don't look good, Abhishek. The asset quality pain has now started coming. I think next will be some kind of margin compression also, which will come for them. So multiple battles for them. I don't see any respite for these guys. Only respite is that the stock prices have corrected and the valuations are now not very frothy. So maybe the stock prices may not correct more than 10-20% from here, but the earnings still have a long way to go.
Well, in Q1 FY25, we saw secured product based NBFC doing really well, whether it's AUM growth, whether it's NPS, and the stock prices have been rewarded as well for some of the secured lenders. Your view on the same?
Yes, so I think, see, it's in India, it's always like that. When unsecured products do well, the secured products don't do well, and when the secured products do well, the unsecured don't do well. So yes, we have seen really good times for all the three large secured products. Okay, one which is the housing finance, second which is the gold loan companies, and third which is the commercial vehicle, or the car financing and the vehicle financing companies. So they have done really well. I don't see a reason why any of these rallies should be punctured, but I think every sector has its own merit, or say an investment argument. We can discuss one by one if we want, but I think that this is a place where investors should be for the next 6 to 18 months, because personal loans and microfinance will take some sweet time to correct and then begin the next good cycle.
Well, Digant, as you mentioned, let's discuss one by one. Now, housing finance sector, that's the secured side of the portfolio, and that's really been well awarded by the investors as well. Now, with Bajaj Housing Finance IPO that's come through, and do you expect a further re-rating of housing finance companies based on what valuation Bajaj Finance has come up with in their IPO?
So, firstly, I'll talk about the short term. Like in the short term, I think housing finance sector can re-rate a bit. One is because Bajaj Finance will be the largest private sector company to IPO. They have good return ratios, a good business model. So that can, effectively re-rate the sector. But let me tell you that the housing finance sector has been doing well for 20 years. And now, as we stand today, the demand for housing finance is not as strong as it is in the past. So now you look at most of these companies are trying to go to products like LAP, builder loans, LRD. Some are even going to the business loans or the MSME loans. And companies like, say, an Aavas, Aptus, Home First, India Shelter, see, all these companies trade at very good valuations, but they are not able to generate more than 15-16% ROEs. If you remember the pre-ILFS time, housing finance companies did 18-20% ROEs. Now, even the best of the best companies cannot do more than 15-16% ROEs. And hence, I think that, this sector will probably, it's good for, the large institutions who want 12-14% compounding. But, for people who aim for higher returns, I think they can give a skip pass to this housing finance sector and move to the next two sectors, which I think are more interesting.
Well, let's talk about gold financing, one of the area that you love the most. That has seen some comeback after banks coming away or taking away the market share and now stopping with respect to further market share in gold financing, and also the fact that the space has been vacated by IIFL Finance. So both these companies, Manappuram and as well as Muthoot Finance, have had a strong loan growth on a sequential basis in their gold portfolio in Q1 FY25. Will the party continue?
I see that the party will actually get stronger. It will not just continue, but it will get stronger because of three reasons. One is, see, the global gold prices are very, very strong. And it looks like that, we'll have 1 2 good years for gold globally as well. Second is that domestic competition has reduced substantially. RBI has been punishing a lot of these public sector banks and, companies like IIFL for not following the right gold loan, the gold evaluation practices and, some other processes related to gold loans. So I think the competition is benign, the demand is very good. And when microfinance and personal loans are not available easily, what is the easiest thing for a businessman to do? Go out, pledge the gold and get the loans. So I think that the incumbents like Manappuram, Muthoot, who have a 100-year history or a 40-year history, I think they will do well over the next 12 to 18 months. So this is where I think the everything is aligned, and investors can expect some good returns in this sector. Muthoot obviously has lower microfinance exposure, so Muthoot that way is a pure play gold loan company. Manappuram has some non-gold portfolio as well, but I think the gold portfolio there will also do very well.
Well, let's talk about the last secured segment in the NBFC space, which is the CV financing. That's seen the highest growth on a sequential basis amongst both secured and unsecured players in the NBFC space. So how do you view with respect to, CV finances going ahead in terms of loan growth and the valuation comfort for investors?
So two things very, very divergent. One is that, see, the growth, asset quality, everything is going very well for the sector. And see, I think when the economy is doing well, be it our manufacturing economy or our agri economy, I think we've picked up quite well after 2022. And if you remember in that 2021-22, the used truck prices had gone up by 30-40%. And which is why we see that this sector has no NPAs. The utilization of trucks have gone up. The diesel and petrol prices have not really gone up for last 2 years almost. So all these factors, I think this sector will continue to do well. But having said that, see, the good players in the sector, which is Chola Finance or a Sundaram Finance, they are very richly valued now. So it's not very easy to think of big returns in these companies. They'll do well, they'll compound, but there is very little room for re-rating happening there. Maybe Shriram Finance has also re-rated, but there is some room there at Shriram Finance. If a company like Mahindra Finance can, get its act together, the rains have been good. Maybe something like a Mahindra Finance can be a turnaround story. But yeah, the sector does well, but stocks have already run up. So I don't see a big opportunity here. So amongst all the three, I think the best is gold finance, followed by housing finance and followed by CV finance in terms of risk return profile for the stock.
Well, Cholamandalam Digant is the most expensive NBFC right now, overtaking Bajaj Finance. Also, I had done this work some time back. Thank you so much for your time and giving your views with respect to both the secured side and the unsecured side business in the NBFC space. Thank you so much.